Hi, Sarah. Thanks for having me. Yeah, I do think there are some bargains out there. We have some companies that are very well set up for 2022, whether it's companies like Ulta, which is part of the reopening play. Look at the numbers with makeup recovering. You're seeing mass basically showing strong growth, the sequential improvement in prestige, and they have incremental revenue streams that are coming from Target and Ulta. Take a look at some other names which have certainly been exciting. I mean, we've seen some great strides that have been made in companies like Abercrombie and Fitch, where whether it's the newness that you have with what's going on with social tourists, new brands like Gilly Hicks, or even look at companies, for example, like what we saw with PVH, their upward mobility with what's happening with Tommy, what's happening with Calvin overseas in Europe, and the strengthening of the business with the brands that they're making here in the U.S. So I think there is a lot of opportunity, and you have some that aren't doing as well, some that need to continue to to focus on improving their business models, and those are companies like Nordstrom.
Right, which has been a big loser in the market. I'm curious about Signet's reaction today, the jewelry company behind Kay and a lot of the mall-based jewelers. Very strong quarter again, raised guidance, said 2022 looks strong. Stock is down. Is it just because it's been a big winner? Is it profit-taking? How do you explain that?
A little bit of each. I mean, everyone's worried about when you think about next year, what's sustainable and what's not, lapping some of those big gains. I think what Signet's doing with the acquisition of Diamonds Direct with an incremental revenue stream is going to be helpful. And the one thing that's out there, there's expected to be 2.6 million weddings in 2022 compared to 2.1 million in 2019 and earlier. What's that going to do? Drive the bridal business, which is a catalyst for Signet.
Tell us about some of the stocks that you think, even though they pulled back, are still got further downside, like I believe Nordstrom.
I think that's one certainly to be watching to see where the improvement can come from. I mean, numbers aren't expected to get back to 2019 levels, not even until 2024. So there's work to do there. I think you do have others. I mean, take a look at the reaction that Gap had with their earnings. There's work to do in order to reset the bar. I mean, most of the time we're talking about where numbers are going to be pushed off, and that's the case with Gap now. They have to revitalize and strengthen with what happened with the port delays in order to show a more accelerated path to achieving that earnings growth going forward. And we need to see it with Victoria's Secret also, where the improvement in the intimates market, which has become more competitive, are they going to be able to show the traction that's needed for that stock to get back where it was in the 70s range?
Dana, in the jobs report that we got today, retail actually lost jobs, 20,000, which comes as a surprise for a sector that's in the middle of holiday and that we hear from CEOs complaining they can't get enough workers. How do you explain that?
I think overall, you look at one number one month, one number another month. Are they all going to add up to the right ball of wax in terms of the numbers that are out there? Certainly, retailers definitely need more staffing. They're paying up. Hours are reduced, though, and you're getting full-time employees with incentive bonuses to work longer. So 1 month doesn't make a whole year. I think it's one point in time. Let's see what the November and the December numbers look like.
Dana Telsey, thanks so much for joining us. Good to see you.
Thank you. Good to see you, too. Thanks for having me.